Welcome to the Tesla Economist. Please hit the thumbs up and remember to subscribe. You can also follow me on Twitter and talk to me on Patreon. I've discussed in the past about eventually insuring my Tesla holdings in case we ever enter a market downturn or a crash. In fact, it's not so much my Tesla stock I'm trying to insure, but my financial position overall. I actually had a tough time through the global financial crisis, but managed to get out of it, with many lessons learned, and I'm sure some of you listening may not have been as fortunate. But like I said, we learned a lesson. Don't leave yourself exposed in case things go bad. I will explain the strategy at the end of the video, so it might be prudent to listen until then. I know it sounds trite, but a paper loss is only real if you sell, and it's in these bad times, if you have to sell, then you lose the biggest. If you're able to weather the storm for a few years, then your loss has most likely recovered, and then a few years after that, you're at a profit again. I'm referring more to value stocks and real estate here compared to high-growth successful companies like Apple that did exceedingly well during the recovery after the global financial crisis. And whilst I believe, at least to a level, Tesla is somewhat recession-proof, of which I have explained in the past, it can still get hit. Also, interest rates can rise, which will reduce PE ratios. There are lots of factors at play. Sometimes I even wonder how amazing it is the markets are as stable as they are. Anyway, it would be nice to have some insurance in the market, just in case. I had considered some puts in Tesla, and was waiting until I saw any stress signals in the market before I started hedging, but I have a different view now. The automotive industry is cyclical, so that in a down economy they get hit hard, except they appear to already being hit hard, and I'm starting to believe more and more that the ICE demand is much worse than they're letting on, but obviously in a recession, then it's even worse, especially if rates have risen too. They would likely require a bailout pretty quickly, but the thing is, there isn't much of a company left to bail out if no one wants to buy their products. The US is potentially making the largest financial investment in transitioning to electric, but they also have a huge established auto industry at risk too. Something has to give. They can't have it both ways. Once more consumers wake up to the realization that you have to buy an EV, and it sounds like this really is happening, and at an exponential rate, and will finally start moving to the next stage of the S-curve, we're still barely at the start. Then there is going to be very little demand for the remaining ICE cars, but actually relatively little supply for EVs, and perhaps even very little supply for ICE too, which means if ICE manufacturers are dropping their supply, then what they do make will also cost more. The price of all cars will rise, cars are going to become expensive, or contain a long waiting list, which we've discussed numerous times before. It's a dying, broken industry. Tesla will start to relieve a lot of its pent-up demand when Texas comes through. We really don't know what capacity Austin is capable of, but we can speculate from 2 million to 4 million, but possibly more if Tesla can refine their manufacturing processes as much as Elon tells us, being 10 to 100 times faster in the future. Yes, Elon says outlandish things and is renowned for getting timelines wrong, but at the same time, you just never know what he, Tesla, or SpaceX for that matter, are truly capable of. They've astonished us so many occasions. Who can say what is possible? I just love how the future is so exciting as a result. It really would look a whole lot more boring without them. This is one of the reasons I love Tesla. Anyway, none of this is particularly good for legacy autos. Whatever market share they have now will dwindle. They'll be making limited supply of all vehicles and have to work out how to downsize with unions against them, a tough task. They'll also have to work out how to manage their $100+ billion of debt, whilst the collateral that is held against it has possibly become worth significantly less, as no one wants to buy a used ICE car. On the other hand, perhaps the used car market will be alright in this scenario, as the new car market has shrunk so much. So, to be honest, that will be hard to judge at this stage. This was the scenario I thought was going to break them and send them straight to bankruptcy, but if they are downsizing their actual ICE production, then this may not be the case. And I think it may have already started. They say these shutdowns are temporary, of course, because everything they say is to prop up the stock price, just like how Nixon said he would only temporarily take the US dollar off the gold standard. And we're still waiting. But these legacy companies still have too many overheads. Perhaps the government will bail them out to keep them going until they can transition to a relative scale of their actual demand. Perhaps 1 million vehicle sales a year. I would say there is a good chance this is also where the government will step in, but they should have downsized enough. They can even sell their unused factories, possibly even. Legacy will maintain their parts business, which is likely still profitable as many people still have ICE cars, and they'll be likely holding on to their older ones longer due to price increases, and thus will maintain them more. I don't know where legacy autos think they'll get the $30+ billion they claim they'll invest in EV and AV. I mean, to invest in AV is just absolutely crazy, especially now Tesla say they will open up their FSD. The stubbornness of these companies is ludicrous. Tesla are offering their charging network and their FSD for them. This is a gift on a silver platter. They also have zero chance of survival if they don't accept it. Their AV was the biggest joke I've seen. It can't even navigate around a smooth bend. It has no AI. Their AV technology is lacking more than their EV technology, which is really saying something, as their EV tech is dreadful when compared to Tesla. But in a recession, it will make it that much harder for legacy autos to borrow tens of billions of dollars. For one, their cash flow is likely very negative at this stage, and there is less capital available in a recession as the money markets contract. Anyway, the US is Tesla's home turf and will absolutely dominate the country as far as private auto transportation is concerned. I joke you not. Tesla will have around 80% of the market share, or maybe even 90%, especially when there is the Model 2 and Robotaxi. The US is still the largest auto market in the world in terms of dollars spent, so it's a good market to own. Similar to Apple, the US has the most iPhones per capita and will have the most Teslas per capita too. I can't see the US legacy autos doing much outside of the US too. I would say most nations are going to protect their own domestic manufacturing where possible. Alright, I probably didn't have to go into that much detail. I'm pretty sure you'll get it anyway. Legacy autos in big trouble now, much bigger trouble in a recession. Okay, so if interest rates have risen and the economy is not as strong, then my income will reduce, my costs will rise, and my assets will fall in value. This is a bad scenario for me. I would most likely have to cover myself by selling Tesla shares at a time when I should be buying them. I want to insure myself against this scenario. As you know, I continually play scenarios in my head and then go through them all with you. Then I can assign various probabilities that I think that scenario might occur, and I can then wager some money on the scenario happening. I leverage it too, as in what is the best return I would get if said scenario occurs, such as Tesla hitting $2,000 in 2023. Yes, I've bet a reasonable amount of money on that occurring, and if it happens, well, I'll get about 10x return on some of them. This is also known as an asymmetric investment. There will one day be a market crash. The question is, when it happens, will Tesla drop from $1,000 to $700, or will Tesla drop from $5,000 to $4,000? We never know when it will occur, which is why we don't try and time the market. If you're not in this investment for at least 5 to 10 years, then this may not be the right channel for you. But in a crash, all sorts of things could occur. We could lose our jobs, our businesses. The financial stress could also result in divorces. Therefore, I try to work out how much additional money I would need to see myself through perhaps 2 to 3 years, when times may be tough, enough to cover my mortgage payments at least. Then I play these scenarios and see what sort of returns I might expect from various investments if this was to occur. Well, it seems obvious to me that the legacy autos will suffer a lot more than Tesla in a recession. Therefore, there will come a time when if I start to see too many signs of cracks in the economy, then I'm going to insure myself. I know some of you think I fly a little too close to the sun with my investment strategies, but this should counter it. I already have enough in life. My objective really should be to make sure I hold on to what I have now. So my strategy will be to buy out of the money put leaps. And I mean well out of the money. And it will be for Ford and GM. I feel like these two have the most to lose, particularly as they also share the same home as Tesla. Toyota, you might think, but I think Toyota may have a chance as a low-cost hybrid still for people who are not ready to outlay as much money on a Tesla. Remember I said may. They may sink fast too. And Volkswagen, well, I don't know. Musk may have something planned for them, especially with Herbert Diess. They are at least able to say the T word. I think I'll buy these puts at various strike prices too, depending on the severity of the crash. As leveraged as it is, it will still not be enough to likely cover the losses from my Tesla portfolio. For example, my shares may drop $1 million, but my puts might only be worth $100,000. Well, that wasn't my intention to cover the losses, as they'll recover themselves fairly quickly. The intention is to prevent me from having to sell any Tesla shares during this period, and it could be a crazy period. Could see the Bitcoin transition even, if currencies get too out of control. Anything is possible these days. But an extra $100,000 would mean I'm not at risk of losing my shares and can make my mortgage payments to cover me through to the other side, and I have a lot of hope for the other side, where electric rules and the people finally have control over monetary policy. If in the meantime the legacy auto stock price dips and my puts increase in value by 2 or 3-fold even, and not from a crash, I'll still not sell them, as they were insurance, not for profiting. Although these companies may just go bankrupt anyway. And that would also make for a good payday. Although sadly my channel will lose some of its biggest advertisers, Ford and GM, so it may hurt my income a bit too. But this could be the start of another swinging 20s for all we know, and we see a bull run for years to come, and these options would be worthless. But at least it might help me sleep better at night, and not have to worry about losing my house or shares. When I feel the time is right, I will let you all know what I have bought and what I'm planning on doing. It might cost 1% of my portfolio value a year to do this. Let me know your thoughts in the comments if any of you have also had similar ideas. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.